Hello investors and traders, today I will speak about few dividend stocks with a high yield dividend stocks to buy right now. So let's start with the first one. It's WBA. It's a healthcare company. Current price is 33 bucks, and let's check it chart. It's a weekly chart. As I see, yeah, we can see that it's a range last 10 years. Here it was using the Elliott waves, the first wave, the second, the third, the fourth is most probably the fifth. Fifth may go even lower. So generally speaking, the momentum indicator there is high. We can see the 37 on the weekly basis. So this stock already oversold and has a very nice dividend of about 6%. And so for me, it's one of the top buys for now. I like dividends, and we can see this stock is down 36% from the beginning of the year, and just last 3 months it's down 11%, so it's very nice. Let's check the fundamental parameters. We can see that its total score is 77. It's pretty nice. Regarding the financial stability, we can see debt to EBITDA ratio is 5. It's quite high. Interest coverage less than 3, also not so high. Its gross margin is 21 and net margin is 3, so it's still profitable company. Its value is very cheap. PE ratio only 6, NPS only 0.22, so it's very cheap company for now. And of course the dividends, we can see that dividend yield is 5.75. The payout ratio is about 40%, so there is a huge potential to increase even its dividend. Only 40% of its company's net income WBA pays as a dividend to its shareholders. We can see that the 3-year dividend growth is more than 2%. It's also a nice sign, and the company even has a little buyback. It also can support the shares price. So generally speaking, WBA now is a very cheap stock. It down more than 30-40% from its high levels. Now it's traded at the levels of 2011, 2000 and 2002, so the 20 years low. So why not to buy? Because now, if I'm not mistaken, let's check the 10-year treasury bond did 4%, but here we can receive a nice dividends of about 6. So also the stock market itself, the price of this its stock can increase, so it's also can encourage you. So anyway, this one of the stock that I'm buying now. Let's check the next stock is AT&T. So using the Elliott waves, we can see the first wave, the second, the third. Here it's last 20 years a correctional one, the fourth, and then I'm expecting to see a nice move up to the fifth. If we'll check a little bit closer this fourth wave on the weekly basis, what we can see. So look, in my mind, yeah, it was here ABC, then ABC, and now ABC, another ABC. It's the decreasing channel. Also now already we are traded at a major support level. It's about 50 bucks. So now I'm expecting, of course, to see a nice bounce from these levels, because also there inside the momentum indicator we can see that it's even lower than 30. So this stock is already oversold. Let's check it fundamental parameters. We can see that debt to EBITDA 3, it's not an issue, so it's generally okay. The gross margin is 54, net margin is 30, even higher than WBA. So in standpoint of profitability, of marginality, AT&T is looking better, and then it's also cheaper, because we see the P5 PS also less than 1, so very very cheap stock. And let's check the forward dividend yield is 7.4. Also the company SWB increased its dividends, not so high, but about 1%, and also has a nice buyback. So generally speaking, of course it's a very nice stock to buy. Dividends more than 7%. AT&T is a dividend king. So it was a nice video about two dividend stocks. The dividend yield of them more than 5%. I'm continue to buy these two stocks now. For me it's very attractive, very interesting to have two nice dividend stocks in my portfolio. So if you like this video, don't forget to subscribe. I have a lot of video about dividends, about stock market, technical and fundamental analysis. So thank you for watching and see you on the next time. Bye.